In 2026, AI voice technology has finally crossed the threshold from experimental novelty into a sharp, functional tool. Marketing for these tools often promises a simple fix. Install a voice agent, and it will sell policies for you while you sleep. However, the early deployments of standalone agents often stall out because a voice tool operating in a vacuum creates more manual work for the team it was supposed to help. This happens because insurance is a volume business. You often need to contact 50 to 100 leads to write a single policy, and human producers only have a finite amount of hours in a day. Compounding that pressure is the fact that 30 to 40 the agencies winning in 2026 are building fully automated prospect funnels to provide the infrastructure a standalone voice tool lacks. To see how this works, view the AI voice agent as an engine block dropping into a larger vehicle chassis. The engine is high impact, but it requires the rest of the vehicle to move a lead to a closed deal. The system moves when you wire the forms, the CRM, and the email follow-ups together, creating a vehicle that carries a prospect through the entire journey. Evaluating this technology requires looking at the machine as a whole, rather than trying to bolt a new engine onto a broken cart. The most immediate benefit of this system is speed. Industry data proves that the agency that calls a digital lead first wins the deal disproportionately. A prospect fills out a web form, instantly triggering the AI voice agent to call within 60 seconds. You engage them while they're focused, shutting out slower competitors. But beware, if your marketing is garbage, this system aggressively pursues low-quality leads. AI cannot force unengaged people from cold lists to suddenly care about your policies. Speed-to-lead automation drastically amplifies good marketing, but it cannot rescue a bad lead strategy. State licensing laws strictly dictate who is legally allowed to sell insurance and explain coverage. In a compliant funnel, AI stays on the left side of this licensing wall, restricted to qualifying and scheduling. It cannot quote premiums or recommend policies. This restriction creates a pristine audit trail for every interaction, a strict requirement for 2026. This setup shifts your operational bottleneck from making enough administrative calls to having human capacity to close deals. The AI absorbs administrative burnout by passing only qualified, ready-to-talk conversations to the human producers. Building a system like this requires a realistic look at the costs, as it is not a simple plug-and-play setup. Monthly infrastructure and platform fees for a mid-sized agency typically range from $300 to $1,500. Factor in 4 to 6 weeks of active tuning to refine, the AI prompts, follow-up email sequences, and CRM mappings. The actual ROI shows up here. While the first call is important, real gains come from automated text and email follow-ups days later. This safety net catches the 20% of prospects that vanish when busy producers forget to circle back. You also gain total visibility into the system, allowing you to see exactly where prospects are dropping off. The intense upfront friction of building the system is the mandatory toll required for compounding long-term revenue recovery. To decide if your agency warrants this investment, let's look at a strategic scorecard. This technology is built primarily for the volume-driven agency. If you pay for leads, receive over 20 web leads a week, and your response time is currently over 15 minutes, this is a strategic priority. For agencies in this category, inaction means losing leads to faster competitors every single day. Conversely, the boutique, relationship-based agency is usually a poor fit for this tech. If your volume is low, you rely on local referrals, and your producers have excess capacity, your scorecard will show that this investment is unnecessary. For those agencies, an AI funnel is an over-engineered solution to a volume problem that doesn't exist. The ultimate decision is an exchange. You accept the upfront cost and operational friction to gain a permanent structural advantage in efficiency. AI optimizes the yield of your existing marketing spend, but it cannot create demand out of thin air. This shift is less like simply buying a piece of software and much more like onboarding a highly efficient digital administrative team. At the end of the day, no software can replace the trust and authority of a licensed professional.